What's up you guys, this is Junior Trader, and in this video we are taking a look at ARM stock, guys. So we'll talk about a couple of follow-ups as well on my videos on ARM that I did, because I was talking about last weekend that ARM will continue to go up, right? And this is where the price was. You can go and check out my videos on my channel, just type in ARM and it will show up. But back then the price was, let's see, right over here. And I said that $136 is a possibility, right? And we got that continuation actually, technically, right? And after that, we are selling off, but that's fine. So we'll talk about all of that, and if going forward, what I'm seeing in the price section of this, is there any play developing on it? I'll talk about that, and all in all, what I'm planning to do with ARM, right? So we'll cover all of this in this video. Once I also let you know, none of this is any financial advice, only for education purposes. You are solely responsible for your own financial decisions and outcomes, okay? So let's begin. Now, with ARM, I want to take you first to the hourly interval, and then we'll make our way back to the daily intervals, okay? So what I was watching back the last weekend back here, I told you that, guys, this box, the blue box, is acting as such a nice support, and this is where ARM closed that particular day as per the post market, right over here in this area, right? And I said that it's looking technically long and it can make its way up level by level and also to 136. We got that play technically. We did see that sell off that particular day. Once it reached that 136, it is more apparent if I take it to the 5 minutes interval. So let me zoom out. So that's where your range is, up there to 136, right? That was the play that we talked about, and that's it. Okay, after that we are selling off. So that's why we do level trading with the stop loss on the other side, regardless of whatever position we're taking, and we have to see the price action to take the positions out, right? So we sold off after that. But has ARM become bearish? Is that the thing? Junior Trader, this thing is selling off, and does it mean it's bearish now? So let's talk about the bigger picture first on ARM here. So guys, the thing is that we do have this upper supply zone acting by now like multiple times, right? We have this huge wick up here, right? And 1, 2, 3, right? 4, 5. We already have 5 resistance rejections on daily interval, and then we are seeing any spikes are being sold off. However, we also have this good support zone holding here for a good amount of time, and also this 50 days moving average is still giving it that support. Even after that sell-off, you can see we had a green day. We didn't had a red day, but you get my point. This is chopping around. This is a range bound. It's having hard time finding the direction. So at this point, to put it simply, if I want to take any long or short play here on the swing side, I want to actually watch some certain levels to break. So let's talk about that. Let's draw the confluence and let's identify what type of things would play out. So the overall market has to play a game here as well, because QQQ and SPY, just real quick, if I show you, they are turning around now. The ships are moving. I'll do another video specifically dedicated to QQQ and SPY this weekend. So hit the like and subscribe if you haven't done so. But an ARM will follow that same thing, guys, because, well, the semiconductor index, when it will start selling off, ARM, even if it wants to go up, it will have that pressure to the downside, okay? Now, we can still trade technically just ARM, but please remember, once these ships would start moving, and so would ARM. However, technically, right now, ARM is still a little bit indecisive. So we still have the opportunity that the direction that it breaks, the move can be taken in that direction, okay? Because vice versa, ARM would also affect the derivative index, right? So now, what is that? So this game is both ways, right? It's just not that derivative index would affect all the stocks, they do, but then individual stocks affect the derivative index as well. So we can't just say, oh, that thing is doing that, so that's why ARM is going to do this. Now, technically, our premises on the technicals would be specifically on ARM, because this will still hold the much more importance than the index as well. But remember, index would have its influence over the stock as well, because if ARM has like what, 5% in the index, whichever index you are tracking, which is not 5%, 1%. So if huge index is moving down, which is creating a selling pressure on the derivatives, ARM will be affected like by 1%. So if ARM can outdo that using its own technicals with much more percent, then let's say if ARM is moving 5%, the negation factor would be what? 1% ARM's equity in that derivative would only net would be about 4%, but ARM will still going up, right? So that's why technicals will have to still stick with the ARM. It's just that you have to see what that influence other indexes would create on it in what net fashion, right? So anyways, so yes, so we will still, our focus is still the technicals on ARM here. That's what will prevail at the end of the day. Now, as I said, we are still maintaining ourselves above 50 days moving average, right? It's like a sandwich zone. We have to see a critical other level break. And here's the thing, we are below 200 hours moving average, right? So we are looking bearish as well, but then we haven't received the bearish confirmation because at this point, I want to see that 50 days moving average break. So here's the thing on the short side. If you're looking for a short game on ARM, on hourly interval, things are looking in that direction, but I would suggest that wait a couple of days if the short play needs to be taken. But you want to see a good break below 50 days moving average. This line is still coming too steep and is still showing support. You need to see the break. I would say wait and watch the break below this blue box. All right, so this could be a little bit of a waiting game, okay? But things may start to look bearish once it starts to break below 50 days moving average on the downside. Now to the upside. Is ARM will continue to go up? Is it bullish? So what is that level? So guys, you're watching 20 days moving average, which is at $128 level, okay? And with that, let me actually mark this here, 128. And with that, let's go to the hourly intervals. And we have the 20 moving average as well over there, 20 hours moving average. So almost there. I would say if it gets above 128 on Monday and stays above it, if it closes Monday above 128, this may start to look bullish again to the upside, okay? So yes, you have to wait for the 50 days moving average break to the downside for which could be at the level of 123 and 90 cents. And so I would say just because blue box is acting so much of support, you would want to see much more weakness. And if it gets above 128 and closes above that, then it may continue higher. It's just not fully in one direction right now. This is still could be a little bit of a waiting game. In my opinion, this is indecisive right now. It's chopping around. You need to see a clear break out of these ranges to the upside, to the downside. I gave you the levels to watch. Then some plays might be taken in that direction, and that could be again coming back to 144 as well. But trade level by level regardless, with the stop loss on the other side and taking partial profits at the levels. But yeah, this thing is not picking that one good direction right now and is chopping around. But you can still see that from that day, once we open 124, technically this thing has been making still some uptrends here, right? So, but you have to watch the levels accordingly, whatever your bias is with the stop loss on the other side, right? So if you're in the bull camp and you want to take this as a pullback, then you want to make sure that it breaks above 128 and it doesn't break below 50 days moving average. So technically your stop loss as a bull has to be below 50 days moving average. If you are a short play and you end up getting short below 50 days moving average, then your stop loss must be somewhere above these levels or above 20 days moving average based off of your risk tolerance, okay? And then we are seeing here where is the influence much more is falling. And right now the influence is, guys, this thing is chopping, okay? There is a support zone sitting here, but the upside is not letting it go up because there's just resistance crushing it down, but then it can't go lower. It's like getting choppy here, okay? So you might have to wait for those confirmations as I just told you on the hourly interval to get a clear direction on ARM here, okay? Cool. Guys, that's pretty much it on ARM, and that's how I would look at it going into next week. So if you don't have your money in this, or if you are not wanting to go in this, yeah, you don't have to take the trades every day. So yeah, you can hold off onto it and look at other stocks. That's how I would look at it right now. All right, I'll see you in my next videos, guys. If you need access to my tools, links in the description below. I have 2 indicators, 2 trading bots, and Wall Street Alerts. All right, guys, bye.